Hello and welcome to Pro Trader Strategies Market Commentary for Monday, December the 14th. I'm Eric Wilkinson and you very well may recognize me or may not because it looks like I'm sitting in the dark. I'm not sitting in the dark. For some reason my light capture is not working. Maybe I need to get one of those TikTok lights or one of those Instagram model lights where it blasts on my face. I don't have that. I only really have overhead and a skylight. But anyway, let's get on with it. You may very well recognize me from mainstream media as the Wolfman, where I've talked about economic data, geopolitical environments, and how that all comes in to impact the markets with some of my market analysis. And I'm going to do the same thing for you folks out there. But I layer on top of it some option strategies that I'm implementing into my portfolio based on those assumptions. For you all, what I've done is I've streamlined the process for finding the right option strategy for any given assumption. No, I'm not talking about just buying a call for a bullish assumption, picking options out of a hat. What we've done over my 25 years of trading, almost 30 now, is streamline that process, finding the optimal option strategy by looking at these internals, looking at these underlyings, and seeing the environment in and around those, and then leading you down this pathway to finding the best option strategy for any given assumption. So please check those out on my webinars so that you guys can follow along in these daily market commentaries. I just don't have enough time to go over all of these guidelines for every single option strategy I'm talking about. I'm kind of going over the assumption that you guys have already seen those and know what we're doing, when, where, and why. Okay, so that's what we're doing here in the daily market commentaries. I will brush over some of that stuff here and there, but just not enough to give it justice of what we learn in those webinars. So please check those out. Okay, let's get on with the economic data. Well, it's a Monday and we don't have a whole lot other than across the pond. We got European industrial production came in at 2.1%. It was expected to only be 1.8%, so a nice beat there. And on top of it, we got a revision from negative 0.4% to a positive 0.1%. Other than that, not any other economic data that I'm really going to even go over. The rest of the week, though, we start ramping up Wednesday, Thursday, Friday, start getting some PMI numbers, Purchasing Managers Index. Now, those are the ones that really get me excited. Why? Because they're forward-looking, and across the pond, we get the flash PMI numbers. So we're going to really be focused heavily on that. Also, we have the FOMC meeting and statement Tuesday, Wednesday. Wednesday, they come out with the statement there. So a lot of economic data to go over the rest of the week and will hopefully give us some more directional bias here, one way or the other, up or down, I don't care. Now, let's talk about the rest of what's going on, not just the economic data. Let's talk about this vaccine around COVID-19. A couple of things going on here. We're starting to see the vaccine go out in masses across the board. Frontline workers are going to be getting that first, and then it will probably go out to the rest of the population. So that's a good thing, right? That's probably given the equities a bit more of a push to the upside here today. But another thing we've started seeing is people talking about another strain. This is mutated twice already. The COVID-19 virus has mutated already once, and now they're starting to see another strain of this. So this virus is doing a lot of what am I looking for? What's the word I'm looking for? Is the strain is mutating. Now, all viruses do mutate. So when you talk about getting your flu shot, right, that flu shot is for last year's strain. So even the flu virus will mutate a little bit over time. So whenever you're getting a vaccine, and it usually is for the last strain that was around last year. Well, this one's really starting to mutate. It's already, like I said, mutated twice in this time and now a third time. So I think that is causing a little bit of wane on the overall markets. Plus, on top of that, we are seeing spikes after the Thanksgiving holiday in hospital stays and the virus just in general. So that also is causing governments to start making more and more shutdowns heading into this holiday season and into 2021. That is going to hurt the economy, especially on top of the fact that government can't come to a compromise on the stimulus package, and that is further exacerbating the overall problem. That could hurt retailers heading into 2021. You know why they call the Friday after Thanksgiving Black Friday? It's because that's when the retailers go from being in the red on their accounting statement, meaning losses, into making money. And if people aren't getting out there and people aren't able to buy, that is really going to wane on the markets. Also, this weekend I saw that people saying that they didn't have enough food to eat was astronomically high compared to what we've seen in the last probably 25 years. So all of those things weighing on the market today. Yes, the equities are in positive territory, but I'm flipping through the charts right now and I'm seeing a lot of chart setups that look like markets are looking to start to roll over here. No confirmations as of yet. It's just the setup right now. So let's take a look at crude oil. It is holding on to that 45.36 area. 9-day simple moving average. We are just above that right now, as you can see on the chart here. The key line in the sand is this 61 Fibonacci, and that is something that the market has held on to. It acted as a major resistance on the way up. It will act as support right now. I would like to see this break down and go back down towards the point of control. That gives more money for the retail investor, or just the average Joe on the street, right? Because when we see these prices at the pump go up, that means we can't spend that money elsewhere. And a lot of people right now are paycheck to paycheck, or are using credit cards to try and finance their way out of this pandemic. And I would like to see this roll over so people aren't spending so much money at the pump. People are still driving. People are still having to go to work. And that would be a nice couple extra dollars in their pocket. Remember, right now you're probably paying $5 to $10 more every time you fill it up than when we were trading down here in the low 30s, all right? So I would like to see this market start to roll up. Starting to see some kinks in the armor of some of these oil-producing companies. ExxonMobil starting to look a little bit toppy and maybe wanting to correct. And all of that being said, would like to see this oil industry start to roll over a little bit. Gold futures off by almost $15 on the day. Yes, they are off their lows. Came down, tested the 200-day simple moving average. That will act as support. Now, I drew up this weekend and threw up a flag setup here, and you can see that last week we did break below that again, and that is a pretty bearish signal that this market is wanting to roll over. Now, I don't see any reason for gold to go up if they are not going to have a stimulus package, because stimulus package would weaken the dollar, and this is a dollar denominated product that would give it strength. But we aren't seeing that. We're not seeing any type of compromise in government right now. It's all about politics going forward, it looks like. All right, bonds. Bonds are unchanged for the most part right there at the point of control. Again, I would like to see bonds move higher as well, because that means interest rates are going to go down. We want to encourage spending right now, and lower interest rates will help create that mentality where I'm not getting any money by saving. I might as well spend it right now and wait to save later. All right, so let's talk about the VIX. VIX is moving slightly higher on the day, but for the most part unchanged. And that's because we're starting to see the equities come off of the euphoria a little bit, especially since we saw over the weekend all of these vaccines starting to go out there. That gave some hope to people. But now people started hearing about this new strain, and I think that that's causing a little bit of angst here, and we're seeing the Dow Jones Industrial Average near the lows of the day. NASDAQ still pushing higher because, well, if there's more lockdowns, which is what we are starting to see, New York starting to lock down again, overseas starting to lock down, and some places are seeing even more stringent lockdowns than we saw for the first breakout. That being said, that means the economy is really going to struggle, and there's no money out there to be distributed at this point in time anyway. But if it's going to be more stay at home at the lockdown, the tech sector will do better. Those companies like Zoom, Adobe, anything to build out the home office will start benefiting from something like that. So NASDAQ, not surprisingly, moving higher throughout all this, up 160 points. E-mini S&Ps broke above the 9-day earlier. Remember, 9-day simple moving average, this little blue line right here, shows short-term strength and or weakness. And we've been above that for the better part of last week. Friday, yes, we did break below that, but created a bit of a bottoming pattern here, as you can see. Today, one would say that as a confirmation, you can see we gapped out a little bit, and we'll be able to see that a little bit better once we break down this chart. But you can see a bit of a breakdown there, or a breakout there to the upside. That would be a confirmation of a bottom, but I don't know if I'm really buying that, because I flipped through all the charts today, and all I was leaning towards was adding negative deltas to my portfolio. Now, I haven't done that yet. Still keeping an eye on it. I'll probably wait to see a bit more of a confirmation type pattern setup for this bearish move in any of the markets. But at this point, I have an itchy trigger finger to pull on some of these. Now, here's a breakdown of the E-mini S&Ps. 30-minute candles here over the weekend, or heading from Friday to Sunday. You can see we gapped higher. Made an attempt to cover that gap, but it just didn't quite make it. This is, hey, everybody, look, we are shipping out all these vaccines. People are getting inoculated and going to frontline workers. But then today, we're starting to see another strain happening. Is this vaccine going to be having as high of an effective rate as the what we've seen with the other strains? That's a bit of a question mark, if you will, for lack of a better phrase. But you can see E-mini S&Ps near the lows of the day. All right, so let's talk about some trades that I'm looking at. Best Buy. You guys remember I set this up on Thursday for this chart setup, looking for a confirmation, of which we never got. It was pretty much an inside. I've told you guys that if it breaks below 99.60, I'm going to be out. Well, we came very close to that today. 99.65, I think, was the low today. There we go. We can see the low up here in the corner, 99.65. So didn't quite do that. Maybe tweezer bottoms here with these two bottoms right there. That could be considered tweezer bottoms there. Hopefully that works out. Maybe tomorrow I'll get a confirmation to the upside. But a settlement below 99.60, that ripcord's getting pulled on that bullish move in Best Buy. All right, IBM. Now IBM, you guys remember I've had on this trade forever. I'm long IBM, and I have been lowering my overall cost basis in this trade for it seems like forever almost at this point. But right now I have on the December short, the 129 calls in there. I'm trying to get out of those for 10 cents or a dime. Right now, last I checked, it was trading right around a quarter, so not quite there yet. I'd be happy to get out of this trade if it rallied up to 129 and just have this out of my trading account. But if you guys remember, I had gotten long this at 120 by selling puts and lowered my overall cost basis over the time. If I get out of these, we'll go rehash all of those trades that I've done in IBM to stay mechanical, lower my overall cost basis, increase the yield in my portfolio. All right. And then let's see, what else do we got here? Oh yeah. 22nd Century right now trading around $2.70. Something to keep an eye on here right now. This setup does not look good. Tomorrow, a confirmation would make me believe that this market is going to roll back over to around $1.50-ish. Because all of these people that have gotten involved in here in the below $1 are probably just itching to cover any longs. Now, that doesn't get rid of my long-term perspective on this company. I think that long term, this company is going to do very well. If you guys remember 22nd Century Group I talked about, they have patented a way to extract nicotine from the tobacco, and that is a little bit different than what we've seen with some of these other companies. It might be a little bit more of a healthy nicotine. Also, further, they have used that process to extract THC from marijuana, and they actually can increase the potency of the THC somehow, and that is supposedly going to be a better way to have THC consumed. So this company done very well, but a lot of people probably itching to cover. Any settlement below $2.80 is going to look very toppy in this, and I'm kind of in this for the long term, so I don't think I'm going to cover it unless we start really seeing some bearish signals coming in, one of them being this and a big confirmation to the downside tomorrow. So keep your eyes out for that. I mean, I'm teetering. Don't get me wrong. I'm straddling the fence right now as a swing trader and an investor. You know, I'm a swing trader and a trader at heart. I don't love holding on to trades for long-term durations, but this is something that I think could have a lot of upside potential, which is why I'm leaning towards wanting to stay in it. All right, so keep your eyes on that. But a settlement below 280, which we are below that right now. You can see this chart set up looking very toppy, looking like a spinning top doji at the top of a big move of all-time highs in a stock is usually a signal to get out. Okay, so for those of you guys who may have jumped on that, I just want you guys to be fully aware of what I'm thinking and all of the risks here. I've looked at it like I'm willing to get out of that this trade for a loss and play the upside potential. All right, so I'm not in the dark, you guys. It looks really dark in here, but it's really bright. I can't understand it. I'm gonna have to go out and get into the Instagram model kind of look where I got the little glow on my face, right? I don't know. We'll have to see. Finally, we're gonna have to talk about one more thing here, and that is our disclaimer. Yep, we do have to talk about that. There are risks involved in trading, and you know, make sure you guys know your risk parameters, know what you're willing to lose in trades, and make sure you know the risks of trading because you can lose money. All right, and that's about all I got for you guys. Other than one last thing for you: if you can't take that, take it easy.